Yes, Baer. Mark, good morning. Good to have you with us, as always. We're counting down now to the budget. We are talking about whether or not we're going to start to see that revival in the economy. What's your sense from what you're seeing? Do you feel that we're on the verge of a recovery, or will you still be awaiting certain cues to build confidence that is definitely going to come?
I'm kind of in limbo now because I had expected the recovery to start building a few months ago, and it was the exact opposite. The market seems to have had the carpet yanked out from, not the market, excuse me, but the economy seems to have had the carpet yanked out from under its feet. And I don't understand why. It appears to be the capital formation and the lack of capital formation that's the principal driver. Anyway, with the budget, the constraint is obviously the 3.3% cap of deficit as a percent of GDP, and the fact that taxes were cut last year. So on the surface, I'm not sure how much wiggle room they have, but if somehow they can pull a rabbit out of the hat, then I think it would make the infrastructure sector look interesting. So I'm just waiting to see what they're going to say. I don't want to try to preempt them.
Mark, in light of that, where do you see the opportunity? I know you said you're in limbo, but if you were to look at finding an opportunity on the back of any stimulus at all, would it be infrastructure? Would it be more on valuations that you'd look for select stocks? So what would be your suggestion?
So with the budget, absolutely, infrastructure would be the first port of call. But broadly on the market, I think the Nifty and the Sensex don't really represent what's going on because, as you well know, there's only about 10 to 15 stocks that are driving those benchmarks higher. And the broader market hasn't done nearly as well. So that, I think, therefore, one can make a case for the broader market, particularly the mid-caps, which have lagged over the last 2 years, but they typically have much higher growth rates than the mega caps. So we continue to like mid caps. I think that their valuations are low and they have above average growth, and therefore that's the place that one place at least that we like.
Mark, the much anticipated Indian Union budget is going to be presented in the next 9 days. What is really the view from the global fraternity? Are they going to be watching the fiscal deficit number with a hawk eye? It seems a given that it's going to be a miss. But if indeed it's sacrificed to try and instill growth back into the economy, would it be okay? And if so, how much of a miss would be okay for the FI fraternity?
I think that that allowing the deficit to rise would be tolerated by the street. I mean, India is a very large country, obviously in size and population and its economy. And at this phase of development, a country, I think, it's understandable, needs to run a current account and fiscal deficit. So I think that, as long as it doesn't blow out to 6% or something, the foreign community would be accepting of it. But whether that actually translates into a broad economic recovery, I think people would answer no, because what's really missing, to go back to what I said earlier, is capital formation, and the base of that is a financial sector which continues to be inadequately capitalized. And so government stimulus can help at the margin, but to really put the economy where it needs to be, the financial system has to be recapitalized. And that's a long and painful process. And it's one there that clearly won't happen tomorrow.
I want to mark AU Small Finance Bank and Axis Bank. Axis Bank numbers bad, stock has gone higher. And AU Small Finance Bank has delivered in a tough quarter and markets are celebrating that. So I think we are in this phase of the market where markets are saying, hold on, there is a lot of liquidity in the system. So good news will be rewarded disproportionately. Bad news, well, we'll excuse it. I think that is evident in the way how Indian stock prices have moved. Mark, as an outsider, when you allocate capital, somewhere Indian markets have not given desirable returns to investors despite the underlying promise of demographics, both in absolute terms and also in dollar terms. So when your clients are asking you, Mark, have we gone wrong in our India call? Should we increase our allocation? Should we pull out looking at whatever we are seeing on newspapers and on television screen as to what's happening on streets of India? How do you defend your bullish view on India, given that performance has not been there, slowdown is not changing, and then there are riots and all kind of political challenges on the streets of streets of metros?
Well, just since you finished with politics, I would say politics is an issue all over the world. I mean, the U.S. is as divided as I can ever remember in history, I guess, apart from the Civil War, between the Democrats and the Republicans and what both stand for. So I don't think India stands out on the political side. But by the way, to say that we're bullish on India may also be a bit of an exaggeration. We're market weight, and we've been that way for, I guess, about a year and a half. I think that the whole emerging asset class over the next 10 years will do well. And I'm not saying that's going to happen tomorrow, but I do think that every decade is different. And the last 10 years, we all know, belong to the United States. My conviction is that the emerging markets will have a big part in the bullish performance of the next 10 years. Whether India is going to be included in that or not, I don't know. I think it's very much going to be China. That's what my perception is now, because China has the technology. And what people really want in their portfolios now is technology or consumer type companies that are kind of a play on technology, like e-commerce or fintech or all that kind of stuff. And the unfortunate thing about emerging markets is they don't have enough. Emerging markets are old-fashioned markets in their sectoral composition, banks, communications, you know what I mean. And the few good technology stocks or consumer stocks that do meet that kind of criteria that I talked about earlier, they are either trading at extremely high valuations, or they're not even listed in their home market. So there are several most of them are listed in New York. Anyway, long-winded answer to your question is I think that people are still willing to give India the benefit of the doubt because the demographics are on India's side. But it's just not the fashionable place to be right now. The emerging story, the good old-fashioned emerging market story, people are more interested in new sector type stuff, which emerging markets don't have enough of.
Around the world, then, Mark, how do you think things are shaping up, and how are we placed in contrast to that, given what we're seeing in the U.S., heading towards a re-election now, post the trade deal? How are things stacking up?
Well, I think favorably for the markets because of all the rate cuts last year. Over 50 central banks cut interest rates last year. The European Central Bank and the Federal Reserve started quantitative easing again. So there's an abundance of liquidity, which is, I think, by far the largest reason why equity markets, including India's, have been strong. Because if you think about it, in 2018, the market went down. Why? Because central banks were raising rates. And last year they cut rates. This year, probably the rate cut cycle is done. So rates are on hold, but they're on hold at extremely low levels. And at the same time, as I said, the European Central Bank and the Federal Reserve are doing quantitative easing. So I think the markets are fine. The interest will remain, I think, very biased toward China because of its very large and growing technology sector, which the other emerging markets don't have. But the big thing that would help all emerging markets, including India, would be if the dollar turns down. And there's a few reasons why it should. If it does, then I think the emerging markets can have actually quite a good year this year.
So if you have to, let's say, identify the high growth sector of this decade, where would you place your bets? And just for the benefit of our viewers, Mark, what I'm trying to ask from Mark is that if US tech stocks created a lot of wealth in the decade gone by, We are requesting Mark to identify that big focus area for this decade where disproportionate amount of earnings growth and disproportionate amount of P expansion could happen. Mark, all yours now.
So, I mean, if I just had to choose one, it would be life sciences. In other words, biotechnology, a component of technology, I guess. But the amazing progress that's being made, particularly in aspects of genomics and the study of the gene and the manipulation of DNA, that I think will create a seismic shift in the healthcare industry and in pharmaceuticals over the next 10 years, and there'll be fantastic price performance. And a lot of that is in the US, a lot of it also is in China.
Sure. So, Mark, coming back to India then, I want to just pin you down to some sectors. I know you've talked about mid-caps, but if you still had to go with a theme, particularly since you feel that, the slowdown is being made out to be worse than anticipated, what would you be looking at when we see that recovery?
Well, private banks are expensive, but I do think that they are the beneficiaries of the PSU banks continuing to struggle with their barely adequate capitalization, and the NBFCs clearly in the doghouse with the defaults and delinquencies that happened over the past few months. So private banks are really in a great position to pick and choose which loans they want to give and the terms of those loans. And they're expensive, but you just saw Axis Bank, I think you just mentioned, reported, or at least the share price is up. So something like that, I think, would be well placed to benefit from the environment that I just described.
Mark, again, I'm putting you in a spot here. It's a nightmarish question if somebody is asking you to predict anything beyond 3 years. But let's say if a client says, Mark, just one trade, and let's go on a 5-year holiday. And we'll talk about stocks or portfolio, that allocation after 5 years. But you're allowed to invest as much as you can, but only once. How would you do that?
Globally or within India?
Wherever you want, Mark. I mean, I'm talking about 5 years.
Yeah, absolutely. It would be Shanghai. I think that the Shanghai stock market now, which is not dissimilar to India in that it's heavy in banks and communications, and that's a reason why it's not been a good market over the last 10 years. I think Shanghai will be a great market over the next 5 years because the technology sector there is growing very quickly. There's lots of new and interesting high growth companies coming to the market with good business models. And the enormous population of that country, it's the same size as India, but higher spending power, better communication network through 5G being implemented, but also they've got something called the social credit system, which is where each individual citizen and corporate entity will be assigned a grade depending on how good or bad they are. And while that might sound very invasive, I think it'll make their economy much better run because it will reduce the level of graft and corruption and make people better citizens. So my pick would be Shanghai.
All right, Mark, really appreciate your time and thank you for joining us, and certainly hope to see much more of you going forward.